Hey guys, Sean from Invest to Live here. Pretty quick one today. I think that it's a big deal we talk about this debt ceiling issue real quick. There's a lot going on in that front. So let's jump on in. Let's not waste any time. The debt ceiling that we're hearing about right now on practically every political channel, news channel, and anywhere where politics is talked about is a pretty big deal. It's affecting the stock market. It's affecting the way we all invest and think about money. And I think it's important for us to set a baseline of what it is, when it's expected that we may theoretically run out of money, what some historical precedents we see here, and what's likely to happen. So let's jump on in and not waste any time. So first and foremost, the United States has a debt ceiling. What this means is that there is a debt limit, so to speak, that's a legislative limit, so political limit on the amount of national debt that we can incur by the U.S. Treasury. And the idea behind this is we want to limit how much money the federal government can borrow, frankly. And we borrow this money to then pay for all the things we need to pay for. And that includes the debt, ironically, of the money we're borrowing, but that's a whole nother video. So that's what it is. Basically, what we're doing is we're going to our credit card company. We're saying, hey, I need you to raise the limit because I've got bills to pay. And the problem is typically that this gets very political because one side wants one thing, one side wants the other thing. I'm going to give you really a baseline thought process here is how I think about it. I'm not speaking to it from a political side here, just currently what I'm seeing, what I'm hearing. On the Democratic side of the world right now, they're saying we want to raise the debt limit, no questions asked, no rules, no stop points, just raise it. That's the end of it. The Republican side, on the other hand, is saying don't raise it unless we have spending cuts or pre-agreed contracts in place, so to speak, right? Not contracts in the true sense, but like they want something basically in there that says you won't do this, you won't spend this, you'll save money here. Now, depending on where you fall on the political spectrum, one side might make a lot of sense to you and you think the other is out of their mind. The other way, you might feel the same in reverse. But here's the reality of it. This has been going on forever. As someone who is a professional investor, I am very frustrated by the fact that this is a continuous and never-ending stream of BS, frankly, where we have infighting that never stops about the same topics. And the debt ceiling is one of the ones that brings a lot of politics to play. Unfortunately, it also hurts a lot of people as well. And let me give you a real example of this. So according to Janet Yellen, she's saying that we may exhaust the total cash that we have by or around October 18th if we don't raise the debt ceiling. Now, I just want to point out how utterly scary it is to think that we would be out of cash in essentially the next 3 weeks, give or take, if we don't do this. I mean, talk about like walking off of a cliff. And the problem is our markets are in turmoil right now. Stocks don't know which direction to go in. Traders and investors don't know where to put their money and how to put that money to play. This is a big deal because it has large scale effects across the global economy as well. When our markets aren't stable in the US, it affects other markets globally. Here's the other thing too. A couple years back, we saw the same thing happen. We ended up not raising the debt ceiling and had a bit of political stalemate. What we saw was federal employees all over the country basically were not paid, and they were essentially told like, "Hey, you'll get your back pay eventually, but for now, you're on vacation, so to speak." Not really, and I'm being a little facetious, but just for what it's worth, think of it in those terms. The reason this is important in a non-political sense is for those who have the money to just not go to work and not get paid, it's fine. But a lot of people don't have that. So it's not as simple as which side is right and why they're right. It's also considerations around what it's doing to our markets, how having this turmoil constantly happening is affecting the folks who are being paid by that federal money. And my point isn't whether one side's right or wrong. What I'm saying is, from an investment perspective, this is very tumultuous for all of us and something that it just seems to happen on a regular basis. So here's what I think is going to happen. I have a high degree of confidence that we're going to end up raising the debt ceiling. Does it mean we'll do it hours before it shuts down? Maybe. Does it mean the president will come in and find a way to force it to happen? Maybe. Does it mean there'll be compromises? Maybe. But let's be honest. More likely than not, this thing's going to get raised because it always does. Just it's more a question of when and what kind of political fighting will happen in between. That's why this is a big deal. That's why you need to be aware of what happens. But this is a great opportunity because if you're looking at the market right now and things are terribly down today, but you think that it's just because of the debt market, and I want to be clear, I'm not giving you advice here. I'm not offering financial advice. But you yourself, as someone who takes trading and investing serious, you need to go and look at how the markets have responded when ceilings have been lifted, in the days prior to that lift, in the days following that lift. See if you can come up with a trend and how and and why you're interacting with the market in a certain way. And I'd love for you to comment below with what you're doing in and around this debt ceiling. I'll give you an example for myself. Once I saw that this was becoming what I would say is a borderline political crisis, I started to take positions of selling puts against some of the companies that I liked that I thought were sort of at bottoms, but I'd be okay getting in cheap if it was the right kind of price. And then what I also did on a day like today, where I saw some of my favorites really go down again, I'm taking calls on, I'm buying calls about 3 to 4 months out in what I would say are really stable price points that I believe they're going to get back to. Now, I never talk about specific stocks necessarily, and I'm not planning to today, but that's the way I approach this because I go and I look at how these charts move when we resolve these issues. We know we have October 18th as a looming date. We know that it's political suicide for either side to hurt everyday, people who are just trying to live their lives. So ultimately, these things tend to get resolved. So I don't want to go too deep in details on that front. I would love if you'd comment below on how you think about this, what you're thinking about the way you can interact with it and engage with it. And, let us know your thoughts. As always, thanks so much for watching. It's a short one today. I'll probably do another one later on when we get more information. Thanks so much. Have a good one, everybody.